Hello, everyone. Welcome to a new episode of One Vision, the FinTech Views. This is Theo, your host for today's episode. Joining us on the studio today is Wayne Miller at ICBA, aka an old friend of mine. Wayne, I don't even remember where we met. Was it FinVA or one of those?
It was, and
It was.
Theo, I always reflect on that when I see you because I honestly think you were one of the first people that I really met as I entered this industry, who I certainly learned to respect as a thought leader and helped give me some guidance. So I think of you as a mentor actually, and
What?
yeah, no, I sincerely do. I mean, remember I came into this industry having never been in it before. I'm not a banker, and I'm not a financial person, if you will. I've always sort of identified as an entrepreneur and try to work hard to make this industry better. But almost 10 years into it now, it's I think you were very much formative for me in the early part of my journey. The other thing too is I think we both have always shared a passion for trying to help people who are perhaps less privileged and don't have the same access that we do to have better financial lives. So I think we've always had a really great bond and connection around that as well. So.
Yeah, we do. We do have that, and others and other things in common. But I remember you introduced me to Uday. That was many FinVates ago. You also introduced me to Kristen,
Yeah.
and she's done amazing work in with Cafe. So kudos to you. You
Yeah.
spotted amazing people and helped build the ecosystem. So this is what we're talking about here today. Because when I look back at when we met to the last decade almost now, you've worked with banks, you've worked with community banks, you've worked with venture partners, startups. You've been practically in taking all the seats, different roles. What do you like the most?
Oh wow.
I know we're not supposed to pick favorites, but what aspects of what you've done in the last decade that you enjoy the most?
Let me reflect on that from the standpoint of where I think I get the greatest reward, which is helping people solve problems, right? And I think that's really what we try to do on a day to day basis. Is this industry is interesting because the problems change pretty rapidly, and look, as an entrepreneur and an owner and operator of small businesses in my past, I can reflect on so many instances where community banks were important to me. I remember when I got out of college, I bought a restaurant and I needed a walk-in refrigerator, and I went to a big bank. I won't name that big bank, but and they wanted, pretty much they wanted me to do a blood test. I needed to have a business plan. I needed to sign away my home. I mean, it was really just, frankly, a bit draconian. And I was very frustrated with it because I just needed a little bit of money to buy a walk-in freezer for my restaurant, which was in Alexandria at the time. Ended up walking down the street to a small bank that existed there and had been there for 100 plus years, and walked in, and actually the third generation of the bank's leadership was there. Turns out he actually liked to drink in my bar. So we had a very pleasant conversation, and I walked out a few hours later with a check, and I certainly had to leave a signature and that sort of thing. But it was where I started to learn about really the spirit of what community banking is all about and how important it is to our communities. So to answer your question, I really, really enjoy working with the bankers. The bankers to me are very satisfying. I think, so many of them truly do operate like small businesses. They just happen to be banks. They've got, very storied histories in terms of what they've done for their communities and how they've put that money back in. And then, like I said, there's a sliver of difference between that and obviously working with the fintechs. I adore founders. You know me, I'm all about being scrappy and I'm so inspired by the work that these founders do and working with these banks to try to help them make their banks better and more relevant and more competitive and more profitable and more efficient and all the things today. But also when you see a problem or an opportunity, because it's not always about the glass being half empty, it's also oftentimes about the glass being half full, and you see how the solution provider helps to help them seize that opportunity or more importantly solve that problem in the way they come together, and that ends up as a successful outcome. That's where I get to be, a little bit like, what was it, Yenta and Fiddler on the Roof, and make good matches, right? So love the bankers, love the founders, and just adore having the opportunity to, and really I think the honor to bring them together and help them create a better world for their consumers and the folks who are at the bank today, right?
And that takes a lot more than what it seems. I think it takes knowing how to identify who could be successful, identifying the challenges, opportunities, and knowing how to match them together, for lack of a better word. I wrote down in here, I love to write notes and scribbles, and matchmaker. That's what I would think you are. You collaborate and you do matchmaking, and it's an art. It's literally an art. Speaking of matchmaking, which leads me to partnership. We've been talking about partnership, I don't know how long. I think even in Finovate in New York, I hear one of the topics of the session is, let's talk about bank and fintech partnership. Okay. Has that evolved? How has that changed over the years from your vantage point? And what are some of the common mistakes that you've seen so far?
Great question. I think the first way I'll respond to it is, let's wind the clock back even to when you and I began to get to know each other and what
in the mountain. Remember that?
Right. That's right. It's Mount Magazine. Actually, I had you down in Arkansas.
Mount Magazine, and you told me be careful of the bears.
Yes, that's right. There are bears there, big bears. But I think when you think about partnership and kind of reflecting back in time, I think the first thing is what has evolved is our comfort with the term fintech. Right. I think when we go back 8 or 10 years, or even a little bit beyond that, these were the days when Jamie Dimon said they're coming to eat our lunch. And so we looked at them as being obviously not friend, but foe, and truly adversarial, because they were positioned in such a fashion that they were coming to take our customers, right? And they were going to take our business. And while there have certainly been a number of fintechs who have evolved into solutions that provide complete banking platforms and lending, et cetera, we've been able to stay pretty relevant in terms of that. But I will suggest to you today that there is still, particularly in the community banking space, some level of discomfort with the term fintech, right? And because if you think about it, JP Morgan is a fintech, Bank of America is a fintech, Chime is a fintech, Stripe is a fintech, Plaid is a fintech. So how do you differentiate that? So there are certainly those that have an interest in disintermediating banks as a whole, whether community or otherwise, but also those that are looking to add value into partners. So I think that's how we get into the partnership conversation. I think the first challenge that, I don't care whether you're a core or you're a $100 million community bank, the first question you have to ask yourself is, do I want to build, buy, or partner? And I think obviously the smaller the entity, the more difficult it becomes to sort of build or buy. So you're kind of pushed in the direction to be able to partner. I think the great challenge for institutions that are probably sub 1 billion is that their cores, for some degree, tend to be their IT departments, right? I mean, because they just don't simply have the resources for all the right reasons. So they have historically leaned on their cores to help them provide new solutions to their customers, either by demand or by need, whether it's remote deposit capture, whether it's treasury, whatever the case may be. And so I think what's really changed, I think, a lot in the last 2 or 3 years in particular is the way in which both the cores as well as business as a whole is thinking about how do we utilize or partner with solutions that we can integrate effectively with our existing platforms, right? So the cores are really starting to open themselves up. I think particularly Jack Henry I always call out, and Fiserv to some degree as well as FIS when we look at the big ones, and even certainly the side cores, which are creating great opportunities, or even primary cores as CSI and DCI, et cetera. They're all working harder, and some are, I think, are ahead and some are behind in trying to create these API platforms and this ability for partners to connect based on what the customer wants. So the bank wants to do business with company X. So I can tell you there's 2 things that my banks always ask first, which is who do you integrate with? And then the next question is what's it going to cost me, right? But the integration component is huge. So we see companies out there, obviously, like Infinigration, Portex, et cetera, that are building these layers of connectivity, also helping us to manage our data, which is a big part of, I think, the conversation today. But the point is that time has enabled us, and the flexibility of the platforms, and as they become more flexible, are enabling our banks to partner with really who they want to partner with in order to really focus on meeting their strategic objectives. And I think, that's where so much of the work that I do lives, is how are we helping banks solve strategic problems, or really be able to be more aggressive about their strategic initiatives by bringing technology into play to help them support that. So I think it's getting easier to partner with banks as if you're a fintech, and it's getting easier for banks to partner with fintechs if you're a bank. I think the challenges there are really probably more regulatory. So it's third party risk management, which is a big issue, right? And the other thing too is, frankly, and I try to express this to the fintechs that I work with as often as possible, is in order to do that effectively, and this is more about the how to do it, is just making sure that you got your act together when you go to sit down with the bank. Community banks really, I have an expression that I use often, which is community banks kind of want to be first to be third, right? And they're not necessarily so much in terms of fast followers, but not necessarily because they're risk adverse, which people tend to say. I actually think they're very good at mitigating risk. It's their job. It's what they do every day. They lend money to people like me, for crying out, right? So they have to be very good at that. So I think when you look at that proposition, two things I think are very important is have your act together when you go to sit down with the bank, have your due diligence package together. Even if it's only 90% there, the bank's going to have some nuanced interests that they want you to pursue, right? But you should have that together. The other thing too is good referenceable accounts. If you take the concept of the lens of first to be third, it makes the bank much more comfortable who does not have the resources to do the level of due diligence and all the things that are required sometimes, to be able to see who are you currently working with and are they a good referenceable client. And it gives a bank a great deal of confidence if I know that Theo's fintech has worked with 5, 10, 20 other banks. It becomes a point for me to be able to reference them effectively. So have that case study or two prepared, have your due diligence in order. And I think you can oftentimes compress the sales process by having those things, in hand as you begin the conversation with the bank, trying to solve the problem. The other thing is, gosh, I really experienced this at Finovate this year with you as well, which is that be crystal clear on what's the problem you're helping the bank solve, right? I found Finovate this year very difficult to understand what so many of the companies who presented did. Maybe it's me, but I don't think it was. And it was difficult for people to truly articulate that. And then of course they've got a good shaker full of AI that they're sprinkling on top of it, which even further confuses it in many instances. But I think partnerships are changing for the better. And I think to ultimately answer your question, and I think the industry recognizes that they can't be all things the cores in particular. We can't be all things to all people, and we need to look at solutions that are out there. I think, Theo, if I'm correct, at any given moment in time, there are 25,000 active fintechs in the United States, right?
That many?
Yeah. So how do you even begin to select and ascertain where you need to go in terms of partnerships? And that's where obviously we get into the other work that we do, is trying to, how do you kind of narrow that down and find the most relevant solutions today for the challenges and again the opportunities that the banks are experiencing?
I think I can absolutely relate to it, because if you flip it around as a fintech, then the question becomes, how do you stand out amongst the 25,000 that are out there that's knocking on people's door? I like what you said. As you were talking though about the core, and about especially for the smaller institutions where the core is practically serving as the IT department, looking at some of the capabilities that the big tech companies are providing. For example, Anthropic with Claude for financial services. We've seen Grasshopper Bank that's building their own MCP server and extending the capabilities to their clients, which quite a few of them are fintechs and entrepreneurs. Do you think that ecosystem will now evolve in a way that the core will have to compete with the likes of the newcomers, i.e. the big AI tech companies that will come in and do things in a probably different and faster way? I do wonder about that.
Yeah, there's an expression I learned the other day. For my entire life, I thought KYA meant something different than it's starting to be today, which is know your agent, right? Instead of cover your, what. But and so I was taken back by it because I said, geez, this makes a lot of sense, because if we are moving, and we are obviously moving in this direction where we're going to have these agents doing things for us in a variety of different ways, both personally as well as in business and inside of our banks. Well, there's good agents and there's bad agents. How are we going to know the difference? It's much like knowing your customers. There's good customers and bad customers, right? So, I think as we move into a much more agentic world, that the way in which we do business is genuinely going to change. And again, having seen Tiffany at
Oh, she's amazing.
Innovate, she said something that I just cannot get out of my head, which is we need to stop thinking about products and start thinking about experience, right? And I think we all sort of know that, but just the way that she put it to me was really sort of summarized it. So I think as you think about this situation of how are we putting artificial intelligence to work to help create that better experience for inside the bank as well as outside the bank, and can we do that in a safe and sound manner, I think creates an opportunity for us to have a more comprehensive future in how we create that experience for our bank customers, both commercial as well as retail. You know, we have these digitally native generations growing up now who've never lived without this thing in their hand, right? And their expectation, I mean, what is it? 74% of bank consumers do not feel strongly about the personalization that they receive from their bank, right? So do these new platforms and these new technologies enable us, again, not just to be outward facing in that, but also inward facing, right? If I'm trying to provide a better wealth solution for you, or I'm trying to find the best mortgage solution for you, trying to understand where you are in your life's journey. And then you take the data that we sit on, this treasure trove of information about our customers, and combine that together. I think the future looks very different than what we see today.
Yeah, and I think technology has the power to bring all of these together. Because one of the examples I love to use, and I wrote that in my book as well, is I have been a particular big bank's customer for over 30 years. I have a safety deposit box with them, or I had a safety deposit box with them, and I had two checking accounts, one in New York, one in DC, because it was back in the day when you move across state line, you need to create a new account, and then I have a small business account. So of all the products that I have with this particular bank, none of these are connected, to the point where when I went to the branch and say I need to close my safety deposit box, they couldn't find it anywhere in the digital record. They had to go to the back room, brought out a tin box, took out a 3x5, handwritten with my name in there, and that was how the records. And I'm like, excuse me, I've been banking with you guys for so many years, and you have my record where? Written down on a little card.
3x5 card, right? Yeah.
Right? Like, think about what they could have done if they had all of these information, digital, analog, bring them all together, actually see who I am as a person, and not just as four separate different accounts. It was eye-opening, and this was last year. So
well,
it wasn't
think about
that
what
long
you just
ago.
said, as a person, right?
Yeah,
right.
as a person.
As a persona, right? And because, and you think about having banked with them for so many years and all the transactions that occurred, what they know about you, right? I mean, it's fascinating. And as we're able to unpack that, look, I mean, I love when I go on Amazon or Netflix and it suggests what I should buy or see next, right? And the fact that I can say, nah, I don't really want that. And it learns and it comes back to me a second time, right? Or a third time, whenever So, I think about it. I have a 13-year-old grandson who has not started to earn yet. I mean, outside of getting paid for chores and good grades, right? But soon he'll take on a job, and so he'll start to deposit that money into his account. I have no idea what he's going to do next, right? Is he going to sit there with a friend of his and say, "Hey, listen, I'm on Robinhood. I just bought Apple stock, or I bought a fractional share of Berkshire Hathaway," right? And my paycheck goes into the bank, and it automatically pays my bills, right? It makes investments. It helps me save. I'm saving for a mortgage, or I want to buy a car, whatever the case may be. I mean, this is where we're headed, right? Without question. And I think the great challenge in that is what role do banks play in that process? And we've got to catch up a little bit in some areas, particularly in community banking, to be able to again provide that experience that keeps us, that sustains us and retains us, and also helps us live better financial lives, which I think is also a great promise of this as well.
A great premise. Indeed. And I can tell you what my teenagers are telling me, what their friends are doing with all those money. It's going to Robinhood, going to buy crypto, going to buy shares. None of the money is going into a bank. That's what I heard. Yeah. So a lot of homework that needs to be done. Looking back at the last few years, or perhaps looking forward, what do you think has been the most significant shift in what community banks are prioritizing? Don't say it's digital.
I mean,
come on.
Look, the two things that community banks worry about the most is fraud and just cyber and breaches, right, and that type of thing. I mean, so I think we're really starting. I mean, there are some companies out there doing some remarkable work here in terms of how people are using their devices and how their behavior is managed and observed. I mean, you look at the work of Sardine, for example, not to necessarily bring companies into the conversation, but the work that they're doing, billions of devices on their platform and their database now, so they can look at how somebody swipes or moves, et cetera, and is able to say, you know what, that's not who that person says it is, right? Who was it years ago in the Western world, when asked, why do you rob banks? He said, because that's where the money is, right? So that will always, I think it was, I remember one of the famous guys, gun toters back in the day, and usually I know his name, but I forget it right now. But regardless, I think our capacity as the thieves get smarter to manage that risk and mitigate fraud. I mean, the thing is, it changes every hour, Theo, right? It's not, this isn't a weekly or a daily or monthly thing. These guys are getting smarter. They're stealing more from us, et cetera. I do think one of the areas that I think is fairly obvious is the way we're paying each other and the way we're moving money, right? Obviously, this capacity of stablecoin is a big, conversation right now. The idea of programmable money. We've seen how the world is embracing cryptocurrency as an asset, and so I think we also want to get paid when and how we want to get paid. So you may want to pay me in Venmo, and I may want it in Cash App, right? I may want to pay you in crypto, and you may want to convert it to stablecoin. The other thing too is I think that world, as we look at payments in particular, we're getting more hub oriented in terms of that approach, and also trying to redefine how we pay for how we move money, right? And trying to find rails that are less expensive, or even perhaps that have been dormant, that we're waking up and putting back to use again. You would see the adoption of FedNow, et cetera. So I think that's a big thing. I think it's I think we take it for granted a lot, right?
It's interesting. As you were talking, I think of, I feel like we live in multiple universes. So earlier I read a report from Makeda that talked about how a big chunk of their customers say that they use cash as a means to control their budget. So they still use cash. They put cash in the envelopes, much like our grandparents do. Right. And then you have the talk of people wanting to build on-ramps, right, and off-ramps for stablecoin. And then I read another news recently that talked about some universities in Hong Kong are looking at tuition fee being paid in crypto, because people, want to start trading and living their lives in crypto. So you see all of the different movements that's around the world, people adopting things in very different ways. And the one thing I think about is adaptability. How do we as an industry adapt to the new ways how people want to get paid and move money just like you say, at the same time keeping some of the other options that people need and want. It's a lot. It's a lot. It's a lot of moving pieces. I think 2026 is going to be interesting.
It is. And, one of the great challenges that will ultimately solve itself over time, or perhaps it won't, and it'll just change even more radically, is when you think about the customer that a bank has to serve today, or the customers that a bank has to serve today. Baby boomers are still around, right? And some of them aren't necessarily digitally native, to say the least. They still want a statement in their mailbox. They still want to physically balance a checkbook, right? And they're still writing checks and likely are carrying cash in their pocket, right? So and then as you get younger from there or closer to this time, the digitization of those populations is much greater, right? So they don't want to write checks, right? They don't want 12 or 15 apps on their phone, or even more in some instances. They want to land in one place that manages their financial lives effectively and able to do that. So I think it's super tough to be a bank today to be able to effectively market to the variety of generations that they're responsible for serving. But ultimately, it will all be digital, right? And, the people, I ask you the question is, so what do you think happens to cash over time? And we've been talking about cash being, diminishing for years, and yet it hasn't, right? It's still a large percentage of the world's population still functions with coins and paper money and fiat currency. Again, I think that will ultimately diminish, but we're a long way away from that.
It's not ever going to go away, though,
Yeah,
right?
I
Diminish,
don't
yes.
see how it can, right? Yeah, I don't know. Maybe we'll go back to trading goats and sheep or something. I don't know. We'll be able to digitize animals.
Right. I did pick up a story recently that there's a fintech in India that's doing amazingly well. And their magic trick is to enable regular day-to-day consumers to find ways to save in gold. Figure that, right? So, especially when the world is a little bit uncertain, when there's so many things happening at the same time, from an emotional perspective, I think some of us do gravitate back towards gold as a means for looking for a safe harbor, if you will. And never know. That could be an interesting one.
Gold's what? About to crack 5,000, isn't it?
It's insane. Had I known, I would have totally gone to Costco. Right? I mean, oh my God, I missed the memo.
Me too. Yeah.
Let me ask you this, and I think I probably almost know the answer, but I'm curious. If money and resource is not an issue, what is the one thing that you want to be able to solve, and why? If Wayne has superpower, you can do anything.
Well, I mean, I'm pretty passionate about people being able to live better financial lives. So that's certainly one thing I would love to solve is how do we enable people to generate assets that enable them to live better lives, right? And because we know that if a family can generate an asset, that the capacity for that family to have a better financial life improves pretty much logarithmically and very, very quickly. I don't think that should come without work, right? I think there's, obviously we're not, I don't want to live in a world of handouts. I don't think that's consistent, but I mean, that's one thing I would love to solve. The other thing, is, again, without resources or money being a problem, is enabling community banks to move more swiftly than they do in some fashion, right? So how can we help them embrace this? Because, one of the things I never like to hear is that community banks are dying and this is happening and that's happening. Everybody's going to hell in a handbasket. Community banks are a critical part of the infrastructure and the vertebrae of this country. And if you think about community banks and their purpose and why they came to be, and the stories are so similar about the one single person who starts a bank to help lend money to other people in that community to be able to make that community better, and that just sort of continues to perpetuate. And I would love to be able to have the resources to help our community banks get there faster and give them the guidance and direction and the opportunity they need to be able to do that more effectively. I think our world could be better for that. And I also think it helps solve the other problem a little bit, because I think our community banks care about the financial health and wellness of our communities, and they've demonstrated that. I mean, they're in the schools teaching the kids and all that kind of stuff, and trying to create opportunities for people to, be able to contribute. Platforms like Spiral, which if I want to give to the local football team to buy jerseys, I can do that in my community, and I can do it through my bank application. Right? It's that kind of stuff. Or there's been, some sort of a catastrophic event. We need to raise money in our community to help perhaps a family that's lost their home to a fire or stuff like that. So the banks are in a wonderful position, and if we can help them move faster and adopt some of these technologies, the end user, the consumer, and the business owner are really the ones who benefit from that. And I think also, like I said, I think you can tie that together and pull that thread through as it relates to the financial wellness of those communities as well. So a little bit of a patchwork answer to your question, but it's a big question. There's a lot of other ways I'd like to take all money and without any worried about resources, things to fix. But if we're talking about our industry, that's where I'd start.
No, I like that. It reminds me of, wasn't there a movie quite a few years ago? It's a British movie, but it talked about the guy, and I think he had a
Bank of
car
Dave,
dealership.
right?
Bank of Dave,
Bank of
thank
Dave.
you.
Actually,
Right?
he's spoken to us at ICBA. He's been a keynote at ICBA Live a couple of years, and fascinating guy. I think we made him an honorary community banker, actually. So
I love his story. It was beautiful. And that's precisely, to your point, why community banks are important, because they are a key part of our communities, and, small businesses and consumers, that's what we look up to.
60% of small business loans, 80% of ag loans come from community banks. Yeah. But
All right. Now it's time for your crystal ball, Wayne.
uh-oh.
What are your thoughts and reflections, predictions, if you will, for the next year? Because I can't believe it. I think I'm starting to see Christmas decoration in the stores.
I mean, the pumpkin spice latte is already on the shelf, right? So that's usually the first thing. So that's happening right after Labor Day now.
Yeah.
Gosh, I don't fashion myself a futurist at all, Theo, but what I do see is artificial intelligence is going to transform our industry. And I think it's going to take us some time to get there, as we, so much of what we see on the horizon is so dependent on the use cases and how we apply them, right? And I think when you think about things like how are we mitigating fraud as it gets more difficult, how are we putting AI to work? How do we put these agents to work? How are we upskilling our employees to be the appropriate human in the loop? How are we going to put stablecoin to use? How are we going to be managed from a regulatory perspective? So many things right now are, I think, at a pivotal point, an opportunity for change that, I think there's some great opportunities in front of us to really rethink about what we're doing, right? And to embrace it. I think the challenge of all that is the age and succession of the leadership in our banks today, which now are a large percentage of them are somewhere between 3 to 5 years of retirement. So who is this next generation of bankers? And they're all likely more obviously digitally native, which matters. They think differently than the last 2 or 3 or 4 generations of these banks. But I do see a future where we live in an agentic world, where we're able to mitigate and manage fraud more effectively, where the efficiencies of our banks matter more than ever before. And that I think the competition is going to get a little tougher, right? Because technology is going to help us perhaps retain and sustain those relationships. So I think we got to be better there. But I don't know. It's a hard question to answer, but I do see those things happening, and I'm hopeful that our banks are thinking more about not why they should do this, but how to do it and what they should be doing in order to accomplish this. And that's very much part of my mission right now is, honestly, if you're asking the questions of why today, I think you're probably pretty far behind. but I think you need to be asking that. So how do I do this, and what do I do? And that's part of our what we're dedicated to in our work right now through things like the accelerator and so forth. Right.
It is time. It's beyond time, I would say.
Absolutely.
All right. Fun question before we wrap up. If someone were to write a book about the life of Wayne Miller as a biography, what title do you think that would be? I have my take, but I'm curious to hear yours.
Oh gosh, what an interesting question. I've had a really wonderful career. I've been so fortunate, and I might add, hardly any of it was truly planned, and how it proceeded, and I've been absolutely blessed in my journey to have had the mentorship of people truly like yourself and so many others. And when I started early in my career with my first entrepreneurial venture and so forth, you don't know what you're doing, and you think you do, and you think you have all the answers, and then you find some good people to put around you who really give you guidance. And to me, it's really, and I've shared this with you before, it's very much part of the reason that I love doing the work that I do today, because if I can save an entrepreneur a day, a week, or a moment in time, help them get there a little faster or rethink things a little bit differently. And it's not about, and this sort of gets to what I would love to sort of think about as if I was to have somebody write a book. To me, it's more about how do we ask the right questions than perhaps provide the right answers. And I believe that the people that have made me better have done so because they've made me ask the right questions, or they've asked the right questions of me, to which I've had to go and pursue to find the answers to. And in that journey, I've learned so much. And so, that's why I enjoy working with the founders so much, and the bankers too, to help them just be better. So I don't know how you derive a title from all that, but just, I guess, maybe it's Wayne Miller just trying to make things better. Maybe that's the name of the book, right? So
one of our previous guests and a good friend of mine, Tony Fish, when we had him on the show, he wrote a book about asking the right questions. So I think you two would have a fantastic conversation together. He's more like a philosopher. It's interesting, but when you said, how do we ask the right question? I think that is important, because if you don't have the right question, the right frame of mind, your outcome will not be what it needs to be. So again, my friend, that's an art. But thank you so much for joining us on the show today. Always a pleasure to talk to you. And
I can't thank you enough. I always, we tend to have to fly around the world to cross paths and have a chance to meet each other,
or run into each other on the train.
Exactly. I so appreciate that, and I hope we'll continue to do that. And like I said, I see you as a wonderful resource, and another one of the Sherpas on this journey. So thanks for having me on the show. Always humbled to have a chance to spend time with you. Appreciate all you do, and look forward to seeing you on the road.
I appreciate you too, and I love our serendipity moments. So until next time, and let's plan better. And for the rest of our listeners, thank you so much for joining us for another episode of One Vision. We'll talk to you next week.